Nike Incorporated reported its fiscal second quarter results on December 18, 2025, delivering a complex financial picture that beat some analyst expectations on revenue and earnings, only to spark significant investor concern and a sharp stock sell-off due to persistent weakness in key markets and segments. Nike posted approximately $12.4 billion in revenue for the quarter ended November 30, reflecting a modest year-over-year increase of about 1% and slightly outperforming Wall Street forecasts. Adjusted earnings per share reached 53 cents. Despite topping headline metrics, the company's profitability and margins remained under pressure, with net income down roughly 32% from the prior year and gross profit margins shrinking significantly comfortably above the consensus estimate of around $0.37. One of the most striking challenges in the quarter was Nike's continued struggle in Greater China, where sales plunged around 17%, marking the sixth consecutive quarterly decline in the region. Weak consumer demand, lower foot traffic in stores, and inventory imbalances have combined to push results lower than executives expected. Nike leadership acknowledged that China remains a significant opportunity but also one requiring a strategic reset, including renewed focus on e-commerce and local engagement, though progress will take time. Another concern highlighted in Nike's earnings reporting was the performance of its Converse brand. Converse revenues reportedly fell sharply, with some reports suggesting declines in the region of 30%, indicating deeper demand issues in the lifestyle footwear segment. Barron's analysts and market observers noted that Converse's struggles contributed to the more cautious tone from investors, compounding concerns around Nike's broader turnaround efforts. In response to the earnings release, Nike's stock fell sharply, with shares dropping more than 10% in extended trading and pre-market sessions. Investor reaction underscored anxiety around the profit outlook and ongoing structural headwinds, despite solid headline numbers. Executive outlook and strategic priorities. CEO Elliott Hill, who returned to the company in 2024 to lead a turnaround, described Nike's progress as being in the middle innings of its recovery. The leadership team reaffirmed efforts to realign the brand around core performance sports, strengthen wholesale partnerships, and address underperformance in key international markets. Nike also warned that third-quarter revenue, which includes the critical holiday shopping season, may slip in the low single digits, reflecting persistent headwinds and management's prudent expectations for continued market volatility. Financial markets interpreted the quarter as a mixed signal. While Nike's ability to beat revenue and earnings estimates demonstrates resilience, the underlying trends in China and the performance of Converse suggest that Nike's turnaround will be incremental and uneven. Investors and industry watchers will be closely tracking Nike's execution of its strategic priorities in the months ahead.